What are the best commodity mutual funds for investors? Imagine having a way to invest in the world's raw materials without the hassle of storing barrels of oil or tons of wheat yourself. That's what commodity mutual funds can do for you. They pull money from many investors to buy a mix of commodity-related assets like physical commodities, futures contracts, or stocks of companies involved in commodity production. These funds give you exposure to commodities without the complexities of direct ownership. Some of the top options for investors are funds that offer broad exposure, professional management, and a good balance of risk and reward. One example is the Vanguard Commodity Strategy Fund Admiral Shares. This fund aims to track a diversified commodity index by investing in derivative instruments linked to commodities. It covers energy, metals, and agricultural sectors, giving you a wide spread of exposure. Vanguard is known for low management fees and transparency, making it a popular choice. Another notable fund is the Fidelity Global Commodity Stock Fund. Instead of investing directly in commodities, it invests mainly in stocks of companies involved in commodity industries worldwide. This approach offers indirect exposure and the potential for growth if commodity prices rise. It has shown solid returns over recent years, reflecting trends in commodity markets. Commodity mutual funds differ from exchange-traded products like exchange-traded funds, which trade like stocks and often focus on futures contracts. Mutual funds are actively managed, which can help navigate market fluctuations better. They also usually avoid some tax issues linked to futures-based exchange-traded funds, making tax reporting simpler with standard tax forms. When choosing the best commodity mutual funds, consider how well they diversify across different sectors like energy, metals, and agriculture. Funds that spread investments across multiple commodities tend to be less risky. Look at the expense ratios too, because lower fees mean more of your money stays invested. Larger funds tend to be more liquid and have tighter bid-ask spreads, making buying and selling easier. Tax considerations matter as well. Mutual funds typically issue standard tax forms, which can make tax season less complicated compared to some exchange-traded products that issue K-1 forms. Also, review the fund's performance history, but remember past results don't guarantee future returns. Funds with steady, consistent gains that follow commodity market trends are often better bets. Investing in commodity mutual funds can be a good way to hedge against inflation and add diversity to your portfolio. They can be especially useful when economic uncertainty is high or commodity prices are rising. For investors looking for options, funds like the Vanguard Commodity Strategy Fund and the Fidelity Global Commodity Stock Fund stand out because of their diversified holdings, professional management, and alignment with commodity market movements. Always consider your own investment goals, risk tolerance, and costs before making a choice.